Bitcoin drops to 19.7 thousand or 19.7K, 19,700. There we go. Whoo. As recession concerns weigh on financial markets, euro nears the dollar parity. Singapore state-owned investor Temasek said it sees more broader market declines in the coming months. Bitcoin has dropped through a major support level Tuesday, falling below the $19,700 mark amid a sell-off in broader markets that saw equity indexes decline and the euro approach parity with the US dollar. Price charts show Bitcoin saw rejection at last week's $21,800 level. It experienced some support at $20,500 over the weekend and dropped to $19,700 mark in early Asian hours on Tuesday. A brief bump up to almost $20,000 was followed by a return to the lower level in the European morning. Bitcoin could drop as low as $18,700, a level it reached earlier this month, technical analysis shows. A recovery from current levels, on the other hand, could see Bitcoin climbing as high as 21,300 zone in the coming weeks. The declines came as Singapore state-owned Temasek Holdings, which manages more than $287 billion of assets, cautioned of more downturn across financial markets, citing the likelihood of a recession in developed markets. Temasek said it forecasts a mild recession in the U.S. next year, adding that China faces challenges and the global economy is in a fragile state. They went from there is no such thing as a recession, there's no such thing as inflation, to maybe there's going to be inflation, to maybe there's going to be recession, to now there will be a small recession. Be very careful with this. This means that we're probably going to hit not a mild recession. And this isn't financial advice, but it's just like it's always day by day inching closer and closer to the truth, which is a possibility for a very, very impactful recession, right? And I just pay attention to it as they keep moving the bar a little bit. They're trying to basically just ease you into the idea of a really, essentially, I think, a depression at the end of the day, potentially, right? Rising inflation, surging commodity prices, and severe supply chain bottlenecks have uncovered further fault lines in the global marketplace, it said in a statement. The euro dropped to a 20-year low of $1 and 0.02 of a cent against the dollar, approaching parity. The weakness arose amid concerns of an energy crisis stemming from Russia's invasion of Ukraine that would tip the region into a recession, while the US dollar was buoyed by expectations of the Federal Reserve committing to faster rate hikes. Equity markets also suffered. In Asia, the Hang Seng Index fell 1.26%, while Japan's Nikkei 225 dropped 1.75%. The Stoxx Europe 600 index fell 0.6%, while Germany's DAX lost 1%. U.S. futures on the NASDAQ 100 and S&P 500 fell 0.68%. Some Bitcoin investors see more reasons for a decline than a rebound. Quote, an additional reason has strengthened our view that the upside will be capped in the near term. This is the news about Mt. Gox releasing approximately 140,000 Bitcoin in August, end quote, QCP Capital Trader said in a Telegram broadcast on Tuesday. Our main takeaway is that there is a high chance of Bitcoin supply flooding the market soon, they wrote. The possible impact would be additional selling pressure on Bitcoin and perhaps the outperformance of ETH and altcoins against Bitcoin. That would be extremely interesting too, because that would be against what you would expect, which is altcoins following Bitcoin, especially in this type of scenario in a bear market. Bitcoin's inverse correlation with inflation-adjusted bond yields record high. The real yield has surged by over 170 basis points this year, putting pressure on risk assets, including Bitcoin. Bitcoin's fortunes are more closely tied to the U.S. real or inflation-adjusted bond yield than ever, with the two increasingly moving in opposite directions. That's against what we would expect, of course, if we considered Bitcoin as a hedge against inflation. At press time, the 90-day correlation coefficient between Bitcoin and the yield on the 10-year U.S. inflation index security stood just shy of the record 0.95 reached at the end of June. The record inverse or negative correlation means Bitcoin is moving in the opposite direction of the inflation-adjusted yield. A correlation coefficient is a number between 1 and -1, representing the linear interdependence of two variables or sets of data. If the correlation coefficient is -1, it means the relationship between the two variables is negative 100% of the time. If the number is at +1, the two securities move in the same direction. A positive real yield means the bond payout is exceeding the market-based measures of inflation expectations. Therefore, the higher the real yield, the lesser the incentive to chase returns from other assets like cryptocurrencies, stocks, and gold. So it's no surprise that Bitcoin technology stocks and gold have taken a beating this year alongside an uptick in real yield. The real yield has surged by more than 172 basis points to 1.72% this year, thanks to the U.S. Federal Reserve's resolve to drain liquidity with rapid-fire interest rate hikes and balance sheet runoff to fight rampant inflation. While the leading cryptocurrency by market value has dropped nearly 57%, the tech-heavy NASDAQ index and gold are nursing losses of 27% and 5.2% respectively. The record negative correlation means the possibility of Bitcoin plunging below the June low of 17,601 cannot be ruled out cannot be ruled out should the real yield continue to rise. And to the dismay of bulls cheering the bottom signals on blockchain indicators, the path of least resistance for the real yield appears to be on the higher side. That's because inflation is showing no signs of slowing down, and the Fed is unlikely to apply brakes to policy tightening anytime soon. The Fed is likely to raise borrowing costs by 75 basis points later this month, bringing the benchmark interest rate to a range of 2.25% to 2.5% from 0% to 0.25% at the start of 2022. Further, the Fed funds futures have priced a 50 basis point hike in September and a 25 basis points hike at the November and December meetings. On Wednesday, the U.S. Labor Department is scheduled to release June's Consumer Price Index figure. The data is likely to show the cost of living rose 1.1% month on month, bringing the annualized figure to a new 4-decade high of 8.8%. The CPI stood at 8.6% in May, and the core inflation data, which strips out the volatile food and energy component, is seen rising 0.6% month on month, amounting to an annualized growth of 5.8%. On Monday, White House Press Secretary Karine Jean-Pierre said the Biden administration expects high inflation mainly due to high food and energy components. Pierre, however, called the data backward-looking and out of date in a bid to control the damage, noting the recent decline in energy prices. Therefore, a weaker than expected core CPI figure might pull down the real yield, lifting Bitcoin and other risk assets. Bitcoin was last trading near $19,650, representing a 1% drop on the day, according to CoinDesk data. I think what this means is tomorrow what we will see is more information based on the U.S. Labor Department and their consumer price index figure, and then that will affect the markets one way or the other, and then we'll see how Bitcoin responds to it. Bitcoin will go up or down tomorrow depending on the news, essentially is what I'm saying. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.